Two AI stocks that I believe can benefit from the AI trend, especially if Nvidia dominates earnings this upcoming week. Now, the two companies I'm going to take a closer look at are ones you're familiar with, Advanced Micro Devices and TSMC. For each company, I want to do the following: look at three growth opportunities, look at risk associated with each company, and just share my overall thoughts on the current price. I also want to learn from you, the viewers, if you have any thoughts on any of these companies, or if you have others in the name that you in this sector that you believe can benefit from the AI space. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
So for me, the growth opportunities for AMD is very, very simple. First is the growth of the MI300X and its upcoming roadmap for the AI accelerators. So while the MI300X is no H100, and in my opinion AMD is no Nvidia in forms of the strength of its AI infrastructure via software, via infrastructure, hardware, and the list goes on and on, I do believe AMD is able to grab some single digit market share in the AI space, especially as it continues to evolve its roadmap and come out with more compelling products. And here's an image of its upcoming roadmap. In 2023, released the MI300. Later this year, is expected to release the MI325X. In 2025, it's expected to launch the MI350. And in 2026, which I believe is going to be a great year for AMD, with the MI400 series. So growth opportunity number 2 and number 3 both have to deal with the CPU side. So this is AMD's core product, right? The processors that go into the server and into your laptops, into your desktop. So right now, if you have a desktop, unless it is a Mac, you're most likely running either Intel or AMD. The great thing is AMD in both the server and client, which is kind of the consumer market, has been gaining market share in the long term from Nvidia. We can see their server market used to be almost non-existent back in 2018, and now by the end of 2023, it's nearly at 25%, and it is higher when you look at revenue share. This is kind of looking at unit share, but right now in forms of revenue share, we have heard from AMD that it is closer to 30%. So those are my three biggest growth opportunities for AMD. And if you do have kind of my ebook where I cover a lot of these earnings, in their most recent earnings, AMD did mention these growth opportunities as well. If you want to pick up my ebook and all the semiconductor companies that I cover, right now it has over 40 and I'm updating more and more every week. The three growth opportunities AMD sees are mainly in the AI space. First is that data center GPU growth, which we talked about earlier, and they expect data center GPU revenue to exceed $4.5 billion in 2024, up from $4 billion they guided last quarter. They also mentioned that AI is not just helping the data center growth, it's actually increasing the amount of compute needed across all markets. So they are also seeing growth in their PC side, in their client side. Finally, they mentioned the client segment growth as customers are excited for the new Ryzen processors, and they are gaining market share and winning a lot of design momentums. So Lisa Su is very excited about the AI space, not only for the GPU front, but also the CPU front, as we are seeing growth there. And like I mentioned, if you want to learn more about these earnings, make sure to check out my earnings book at moresemiinvesting.com, or you should see a link down in the product below. Now, I want to take a look at some of the risk for AMD, and I want to say the risk are actually associated with those growth opportunities. So with the MI300X growth, there's a lot of competition, mainly from Nvidia, controlling pretty much the entire market, but you also have competitions from companies like Intel, which are releasing some form of AI accelerators, and then you have internal solutions like every other clouding server provider creating some form of AI chip. Now, while I don't believe those internal solutions are much of a threat for AMD or Nvidia, is something to keep in mind out. Now, also supply chain difficulties. The MI300X, just like the H100, needs some form of advanced packaging to be created, and that supply chain is very constrained in capacity. So that can obviously kind of halt growth opportunities, What's more important is AMD does have a more advanced packaging needed for the MI300 compared to the H100, so their supply chain capacity is even smaller. Finally, the overall adoption, if AI is not real, and I don't believe that's the case, but it's also important to understand that the appetite for GPUs can see a blip of slowdown or can kind of slow down for any other reasons, which can obviously halt that growth opportunity. Now, in the CPU server growth, there is a lot of competition, internal and external, right? The huge competition is Intel, but the CPU market is very different than the GPU market. While I don't believe GPU external competition from big tech giants is a risk, I do believe it is a risk when it comes with CPUs. So we can see most recently Google Cloud announced their ARM-based CPU, Google Axion. All the other players have done the same. Microsoft, Meta, Amazon all have their own CPUs. And I do believe this is a bigger threat in the CPU market opposed to the GPU market. So competition there is pretty big. Also, you do have potential defects. We are hearing that there might be some defects with AMD CPUs. At the moment, I believe this is no news or nothing I would worry about as an investor, but it's always the potential risk for future iterations. Market spending transition. Right now, we are kind of going into this AI spending where more money is being spent on GPUs opposed to CPUs. But remember, for each type of server, you need CPUs to run it. Now, in the client side, so these are the CPUs that go on your desktop and laptops, you are seeing a huge competition growth from Intel, obviously, but then you also have new players like Snapdragon, which are entering the space. So a lot of competition in the CPU front, and this is probably one of the biggest risks, in my opinion, for AMD. Now, looking at forward 1 year PE ratio, which is next fiscal year, so about a year and a half from now, PE ratio for then is 28.06. I personally don't believe that's overvalued, especially since I don't think many analysts most analysts, in my opinion, are underestimating AMD's AI accelerator growth. So I am a firm believer that AMD at these prices is a nice dollar cost average opportunity. Now, the second stock we're going to look at is TSMC. And for those that are not familiar with TSMC, this is the largest manufacturing company in the world. They manufacture the chips for AMD, for Intel, for Nvidia, for Qualcomm, and the list goes on and on and on. So they are pretty much a manufacturing company. If we look at their overall PE ratio, they are cheaper than AMD at 19.92, and I'll explain why I think that's the case in a bit, and I'll explain which one I prefer as well. But three growth opportunities for TSMC is first, the growth story for AMD and other semiconductor companies, right? If AMD and all these other semiconductor companies are expecting growth, they're going to need more chips, so they're going to need more orders from TSMC. Second is countries want to grow their chip manufacturing footprints and provide subsidies if you build inland. We can see TSMC just recently broke ground in Europe where they're building a factory in Germany with a lot of subsidies from the German government. We also see that TSMC did get some form of subsidies here in the United States with CHIPS Act, with building chips here in the United States or manufacturing capabilities here in the United States. So that's obviously a huge growth opportunity as you're able to expand and not really have that full cost. The final thing is, from what I've been seeing, management is very optimistic with the growth and they're obviously willing to provide great solutions for this AI market, but they're conservative with spending. For example, TSMC is not always buying the best of the best equipment because they believe that with the equipment they have right now, they can still continue to evolve at such a rapid pace. So this kind of making sure that they're not overspending in this overall market due to some certain hype trends can help investors sleep easy that TSMC is very conservative and making sure it's using its money wisely. Now, in forms of risk is first, the semiconductor is very cyclical, and obviously in a cyclicality that will impact the manufacturing aspect. The second thing is countries, as they want to grow, different countries have different types of labor laws, different types of hourly culture and stuff like that, and that can impact margins. Most of the manufacturing in TSMC is in Taiwan, where there tends to be cheaper labor and maybe higher hours, and that type of culture might not be the same in Europe or the United States, so that obviously can impact margins. The final thing is competition. You are seeing kind of companies like Samsung and Intel increasing their spending to build massive amount of manufacturing capacity. The last risk is one that I believe it's not only a risk for TSMC, but it would be a risk for every other tech company. It's just potential geopolitical tensions, and you guys know what I'm talking about. Many believe that's just a semiconductor risk, but that would be a risk to the overall to the overall market in general. So not just for TSMC. Now, we can see here Intel, for example, like I mentioned with one of the risks, is spending a lot of money on some of the top of the line equipments from ASML. So this is what I mentioned, that maybe TSMC being a bit conservative on spending might be a risk in the long term of things, but TSMC has been a huge market share leader for a long time, and I do believe they know what they're doing. Now, this is from my earnings ebook, and again, check it out at moresemiinvesting.com, but I have a segment where I cover about headwinds and challenges in the most recent earnings, and TSMC mentioned rising costs, for example, due to process complexity, higher electricity prices, and global expansions. They are seeing a huge amount of rising costs. The second thing is overseas fab dilution. So like I mentioned, as they are entering other markets, dilution in gross margin is coming in the upcoming years. They expect that overseas fabs will dilute their gross margins by 2 to 3 percentage points next year and in the next several years as well. So now TSMC, very similar to AMD, is one that if I was to buy at these levels, it would be dollar cost averaging opportunity. But which would I pick over one? Would I pick one over the other? And the answer is yes. I would pick AMD any day of the week. The reason is when I'm looking to invest in the semiconductor space, I would rather look for a company that can outperform the market. That's not to say TSMC is a bad company, but if we look in the past 5 years, TSMC has pretty much performed like the semiconductor market. If you look in the past 10 years, the story is the same. TSMC has pretty much performed like a semiconductor ETF. So if you're going to give me results at a semiconductor ETF, I would rather just invest in a semiconductor ETF, and I believe in the long term of things that's going to be the case. Now AMD has completely outperformed, and we know historical results are not indications of future results, but I believe AMD has the opportunity to continue this trend. Obviously, if you have the opportunity to beat the market, you also have the opportunity to completely underperform the market. So for me, I'm more of a growth style investor, and for that reason, I would choose AMD. If I was more conservative, I think TSM would be my stock to pick. But like I mentioned, if that was the case, I would rather just go with an ETF approach. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.